All right, so for today, I'm going to go over some of our trend journal that we go over every week. We forgot to do it last week, so I'm going to re-go over last week's and kind of go over this week's as well. And then go over kind of some seasonality thoughts and expectations coming up into uh, February, March, April, May, and continuing throughout the rest of the year. So, where are we in a sense of a trend quote? We are 21 days into a new uptrend. We broke below the 21-day moving average, which is my definition of okay, I'm not in a trend anymore. When we break below the 21-day moving average, then I cancel it and reset once it gets back above that 21-day moving average. And so with that, on the 4th of January, we cut the trend. We broke below the 21 day with displacement. We held below it for 2 days. And then on the 8th, again, we broke right back above. So we are 21 days into our new uptrend now. And so we are starting to get a little extended in the uptrend. The last uptrend we had lasted 40 days. And you can see here, after 21 days, you start getting 21 days, you had um, a stress test. We had a stress test at 25. And then we had a good long week where we didn't have anything, which was cool to kind of see in the sense of a market. We only lasted 40 days, which that was the longest trend we had had since June. Notice here, every single time in even in September, 15-day trend, October, November, it only lasted 11, 10. And so I keep track of these trends and to see how long each of them last, how strong they are, and who's the leaders and what is everybody looking at. Lately, the leaders, and as they should be, have always been semiconductors. When you see a strong environment, a strong market needs to have semiconductors to fuel the market for the most part. They're kind of the AI, they're the initiatives, they're the upcoming. So you want to see semiconductors leading the market, and they have been. SMCI has been going insane, Nvidia is going insane, AMD's at new highs. Everything's really going crazy with semiconductors. So the leaders have been semiconductors. And throughout earnings, we've had just kind of shitty day moves throughout the intraday. It's just been choppy or whatever, and then really big moves after hours from earnings. We had great earnings from the all the tech giants. We had good earnings from a lot of these smaller caps, and we're gonna go over a couple of those today, which would be Elf, Palantir, and Fortinet. Those are a few of them that did really well. And Snapchat, which had such a good setup on a TA base, but ended up getting really fucked because they suck for earnings. So one thing that we do notice is that today we had China was ripping, so we're gonna see if we can see follow through in China. It's been beaten down. It's had so much bad news that it's like, okay, are we finally potentially seeing a bottom in China stocks? We don't know yet. But we could, this is kind of that everybody's scared, everybody's trying to get out. They're trying to make sure that people aren't shorting China stocks, and so that's why, okay, let's maybe look to see if they're going to start popping off again. I know Robbie was in FXI. That's looking really good. Baba looks good. And I've been saying this for a while that the accumulation is there. Like the volume isn't showing strong sell signals. The volume has actually been showing more buys than anything. And so that's one thing that I've been noticing, but the price action has just been so terrible that you can't trade it. So I haven't even been touching it. So it might be time to kind of look into selling puts to get longer term and see maybe what's going to happen. They're still below the declining 200-day moving average. Most of them are still below a declining 50-day moving average. So that means they're also going to need to go sideways for at least 5 to 6 months, in my guess, 3 months even. They're going to go sideways for a little bit in order to fully make a move. They have to make an accumulation base. They have to make a phase one. Right now they're in either most of them are in stage 4 downtrends, so they're going to need some sort of stage 1 accumulation let the 30-week and 40-week moving averages catch up to it, and then they'll start going boom. The 40-week will flatten out, and the 30-week will flatten out, and then price will start moving a lot bigger once it gets above those. And that's what I tend to look for a lot of times. And so China is one that I am starting to look at. A lot of small caps do have really, really nice setups. A lot of small caps have been going sideways for 6 weeks even. I was talking about back here that I wanted some sort of consolidation. And I was particularly thinking in the indices, but what we are seeing is a consolidation in a lot of smaller caps. We're not seeing that consolidation I necessarily wanted in the indices. We had a small pullbacks and we had like a 3 weeks tight. We have had some consolidation, but there are a lot of stocks that have 5, 6, 7, 8 weeks of tight action where it looks like nothing. It's like 10% or less in like of just up and down range in a course of 6 weeks or 8 weeks, which is super tight. And that's a huge sign of institutional accumulation. When you see that and you see that they're not willing to sell these, then you really start seeing, okay, maybe it's time to look into them. And I got into one today, Lyft, which we'll go over as well. So there's our trend. Usually we're looking for about 40 days, 40 to 50 days for a trend. So we could potentially still have 20 days. Seasonality wise, the end of February, mid to end of February, roughly after the 16th ish, then you start seeing more weakness in the market. That seasonality wise, we're going to have to actually see how the price action looks. But in the almanac that I use, this is all coming out of the Stock Traders Almanac by Jeffrey Hirsch. It specifically says in the end of February, it says, quote, end of February, miserable in recent years. And I talked about this on Sunday as well. And we did see a huge down move in a lot of the markets last February. Then February 2022, we seen down moves. February 2021, we had a down move. And so we have seen down moves towards the end of February. One thing about with election years specifically, the average gain for February is 1.8%. So a plus 1.8%. So you're expecting to go up 1.8%. But the average loss in March is 1.6%. So it tends to actually give back half of most of the move from February and March. Seasonality wise, in election years, so this is all speaking election years as well. We are in an election year, so it makes it so it specifically puts together the different election years throughout the years. So we've had 18 election years since 1952. In 1952, so from not that election year, but the one after that, that would be 1956. So from 1956 to this year, 2024, we've had 17 election years. Out of those election years, from May to December, there has only been 2 years where the S&P 500 has been negative. And so what's that mean? That means every single year, if you were to buy in May the S&P 500 and then hold it until December, till the end of the year, there would have been only 2 years. If you would have done that every year, there would have only been 2 years where it would have been negative. And so that's something that I'm looking into for a lot of these stocks that are still kind of going sideways. If they get a little pullback, or some of the extended stocks, if we get a little pullback come the end of February, come the end of March, those should be really good buying opportunities for moves up and coming and for good swings going into May all the way through December. So that's a huge seasonality thing that I've been looking for. There are some things that make me cautious, and I'm going to go over those as well. But I can only be cautious and do the correlations ever so much, but price action is really what you're looking at. So it's just things that I look into. They're not things that are actually going to make me trade off of those. And so I'm going to go ahead and go into trading view and deep view. I'll go into that as well because I always like going through deep view. And so a couple of the charts that I want to go over in trading view specifically. IWM, and I spoke about this last week as well. I've been watching this IWM chart for a potential breakout. We have this strong high here, and this is what I mentioned a few weeks ago, last week or a few weeks ago. Go back and go through some of the previous go back through the previous recordings and you'll see me mention this. We broke this strong high here, just barely wicked above, came back, came into this imbalance, into this fair value gap, and now have formed a swing low here. And that's a huge thing for me. So now we formed a swing low, had two nice congestion candles, allowed this 10-week moving average, which that's usually my go-to. I don't like things if it closes below a 10-week moving average, if it closes more than 3% below the 10-week moving average, I'm usually a little more cautious. It makes me more cautious. And so this we've actually oh wait, this is QQQJ, not the IBWM. There we go. That one's one of the ones I'm going to talk about too is QQQJ. But IWM is what I was meaning to do. It's very similar setup. They hold very similar things. QQQJ is just more your growth tech stocks, like your small caps tech stocks, where IWM, they put in a lot of banks and biotech. And so QQQJ is kind of a good way to get like your smaller tech stocks and your growth stocks that I look for a lot. But very same thing as I mentioned with IWM. You came up here, took out this high that made this lowest low, came into this imbalance, came out, and now we're kind of below the 10-week moving average, which is makes me okay, kind of cautious. But if we could get above it and close strong this week and form another higher low, then it's still pointing up. It's still in a uptrend, the 10-week moving average. So I'm gonna be it's more like a small flag, nothing big. And so then if we still pivot here, then we'll be looking for this 206 level, just bare minimum. And then next would be this 212. And then we're starting to get back into this range here, where we just have, boom, it'll be something like that, and to here, which that'll be some sort of a range that we end up having like a, it'll just probably just end up ranging. IWM likes to range a lot because of the natural of how many stocks are in it. There's 2,000 stocks that make up of the IWM. So it does range a lot. But if we can come up here, we can see a good move in small caps. Come up to this 210, 209 to 210, 212 level. And then if we start, we'll probably, the first time we hit it, we'll probably get rejected and pull back and then have to try again. It's just the nature of the beast. A lot of times when you hit it the first time, you're not going right through it, especially if you've gone straight up into a level like that of heavy resistance. This is over a year long of sideways action coming into that. So it's probably not going to break the first time. Don't expect it to. Once it gets to this level and if it raids this high right here and it doesn't have very strong and we've just gone straight up, I'd probably look to sell your longs or at least trim. And so this is what I'm looking at for a lot of the smaller caps. If we can pivot here, we had a good day today, not the craziest volume, but had a good upside reversal and formed a swing low. So now we have a higher low here and then a higher low here, which makes this high, boom, this high is now a weak high. So that gives us at least a look to come back up to 200. If we can get some displacement above that, then we'll look to come back up to this 205. So IWM is one that it's very important right now for a lot of the breadth in the market, because if we don't get a healthy breadth, because right now we've had a lot of sideways movement in a lot of stocks, sideways movement in a lot of stocks, but then heavy moves in tech, heavy moves in like SMCI, semiconductors. If those can go sideways and allow the rest of these stocks to break out, that would be super strong and healthy for the market. DXY is the next one. We talked about DXY down here as it's coming into this 200 EMA. We mentioned, okay, it's going to come up, it's going to bounce, and we're looking to come into this fair value gap above these equal highs. Go back and look at it. Go to the December 26th. Go to the December 19th stream, where that's where I was talking about it. I'm talking, okay, we're looking for a pivot. We pivot here, then we move here. Okay, we're looking to come up to these highs. Now we've made our objective. We came up to these highs, and what are we doing? We're getting rejected. These moving averages don't mean shit right now, besides for this 200. So let me turn these off real quick. They're just sloppy, in my opinion. I don't like those. Look at the candle that we're creating. So if we finish this week with a candle like this, then the next week I'll be looking to form a swing low, or a swing high. If we don't break this high of this week, next week, then that would be considered a swing high on a weekly chart. And that's what we would be looking for a possible move back down to this 101 to 100 level. What we notice here is today we are back above this 200-day moving average. So if we do get um, some sort of support at this moving average, then we'll really have to see what happens here. If not, if we can come back below these lows and get some displacement back under this 200-day, then I'll be a little more confident. Right now, it's just a look. Okay, this is what I'm anticipating to happen, but you can't actually do anything with it because there is no confirmation yet. So we're going to have to be patient. We're going to have to wait till next week and probably the end of the week to see how this is really going to react. We could come back up and come all the way up here into this level, even at 105, and that would be perfectly fine. It's still in this fair value gap here. That's an order block inside of fair value gap. That would be perfectly fine. It's still a lower low from this. But if we close this weekly candle as is, then I wouldn't want to break above this weekly candle unless it's just a wick above and then close towards the lows again, like a downside reversal. And if that happens, then I would expect most likely the market would do pretty okay. You do see these very clean equal lows here. They're not perfectly equal, but they're pretty nice. And then this imbalance here, which this is just a volume imbalance, very small. I don't know if it's going to have it's this little gap. I don't know if it's going to have any sort of value, but we'll see. And then this fair value gap's already been used. So that's easy. So then you have this low right here. And so that's what I would be looking at DXY. Really watch this 200-day moving average. You see here that it does have some sort of value. Last time it broke, it held for 5 days, 10 days. Looks like 10 days roughly. And then retested and broke the fuck out. Same here, broke down, retested, failed. So this does have value, but it does kind of wick above it sometimes and have some moves above it. So I'm definitely watching to see if we can hold this 200 EMA. If we cannot hold this 200 EMA, I'm looking to come back to these lows, to this 100 level. That would be key for DXY. Then UJ would kind of be very similar to DXY, where it's almost a SMT divergence because UJ never took these highs. And let me go to DXY real quick on a daily. DXY did take the highs. DXY broke out from this range right here, where UJ has not. And so that's somewhat of an SMT in my opinion, just kind of looking at that. But if you do look at UJ on a 4 hour, we are at the anchored VWAP from this specific low from February 1st, which is also the month to date anchored VWAP. So we're watching how we go into that. We are inside a breaker block here. I would be ideally looking to come into this fair value gap and see how it reacts in this large fair value gap here. We're actually kind of bouncing how I was looking for on a 4 hour. See, like if we can hold this breaker here and this anchored VWAP, that would be super good for potential longs, even just to for a higher low. Because I would like to dig a little deeper, but it's starting to look like it wants to bounce. If we can hold here and hold this low right here, 147.73. If we can hold that, then we could potentially come at least back up to this 200 EMA. Or even this breaker right here, right around 148.4. And that would just create a lower high. And that's what I would really be looking for. And this would be really nice. Like, if DXY starts going down, it will take UJ with it. And if UJ starts falling and we can get a short somewhere around here, target this high for a stop, and then target somewhere down here into this fair value gap a little deeper, that would be super nice. We're looking at a 4-to-1. Depending on how deep I would look a little deeper into it. Probably somewhere around here. Let me look on a 4 hour. Even here. Notice these levels. I like these. Boom, 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 boom. So in here, bounce, bounce, bounce. Once it broke above, it undercut. Once it broke back above, boom, we ran. Boom, we ran, and look at once it got below. So this could be the range. Once it breaks below here heavy, then you can short it down to here. So if we do bounce here, you can see a potential higher low setup coming into here where you have this breaker right there. And then that would be coming right into this fair value gap on the 1 hour. And I think it's a fair value gap on yeah, huge fair value gap on the 4 hour. And you could even put your stops less conservative. You could put your stops somewhere up there. Like this. And so this is something I am looking at. I'm looking to see how we react here. Possible longs this tonight if we see a good pivot here. I like how the 15 minutes looking so far. I want to see this 1 hour close. It's almost closed actually. 4 more minutes. This 1 hour, if we close like this is looking fun. This is looking nice. I like the raid. I wish it would have hit this fair value gap though. That's the only problem with me, is it didn't hit the imbalance. That tells me it could want a tiny bit lower. But I think UJ could bounce, has a good bounce here. Max Lev, hit it, player. Hit the Lev. Longs to shorts. That would be the setup, in my opinion. If you could get in down here, this would be ideal. Somewhere inside this fair value gap. But if we bounce here, stop below this low, if we don't come to that fair value gap yet and we leave it for later, it would be something like this. Even just to this 200 EMA. 3.5 to 1. But I'm not entering this yet. It's still early. So there's no sign, no confirmation of a bounce yet or anything. But this is definitely looking decent for a lower high bounce. Was waiting for 147.6. Yeah, that's kind of what I was waiting for too. Down into these deeper levels, that would be ideal for me. Let's see if you go to a 15-minute, the fair value gap is actually like right down here because this one was actually filled. And so that would the 15-minute fair value gap would be right around here. And then like if you just do the 50% of this, that would be here. That'd be deep as fuck. I don't know if I would like it if it went that deep. That's a fat fair value gap. So hopefully it just goes to this one. This would be perfectly fine. But this is the first imbalance inside the under the 50% is down here. All right, so then QQQJ, I mentioned about it's very similar to IWM. It is the next gen, so it's like a growth stock. We just have this really nice, like it wicked above, came into the imbalance, formed a swing low, and now actually your strong high is right here. This is your strong high. You're inside this is all internal liquidity now. Internal liquidity could be seeking this external liquidity though. And then once it breaks above this, hopefully it would form a fair value gap and then we could push down a little lower into one of these levels if we start seeing the market pivot. The one chart that I do look at a lot, that this is kind of what makes the market move down more than a lot of things in my opinion. This chart, the market follows pretty well. And I've talked about it multiple times because I've been watching it for a long time. You see, when we do have down days, this is kind of going down with it. Here, we have a down days and it's going down with it. This is the S&P right here. This is the 2-year versus the 30-year. This goes down, the S&P kind of follows with it, even on short pullbacks. The one thing though is once it starts getting reverted in previous patterns, let's go back to here. 2007, we pulled back heavy as it got reverted. 2000, we pulled back heavy as it got reverted. 1990, we pulled back heavy as this got reverted back to normal. If we start seeing something like that, that is the one biggest concern I have for the market is if we follow suit. Do I think it's going to happen? I don't know. Am I predicting it's going to happen? Hell no. It's just something that I noticed. This is predicted and followed some sort of market pullback. We've seen a heavy market pullback in 2022. What are the odds that we have a heavy market pullback in 2024 or even 2025? Pretty damn low. Pretty damn low. Doesn't happen very often. Notice here, it only happens every 7 years, 10 years. So it's very, very low. But it's something I keep an eye on. I focus on the price action of stocks, the setups of stocks, and the movements of the market. I keep an eye on this just to kind of see what's going on with it because this is more of a macroeconomic sentiment. So then I do want to go into a couple earnings that were phenomenal. Palantir had great earnings. 20%, they're up as hell. 30% today. Up 100%. 600% from last quarter. They're up 1 point from this quarter to last quarter. Year over year, they're up 100%, going from 0.04 to 0.08. They're up net 20% for revenue, going from 508 to 608 million, 508 million to 608 million. So they are still small and still have a lot of room to grow. In my opinion, I I said this I said this down here as well. Palantir is in its institutional advanced phase. Let me get the screener to work. This DPU is great, but it doesn't always have the best, doesn't always cooperate. So you have your institutional base, your IPO advanced phase, failure, institutional, due diligence phase, and now it broke out from this strong high. This is the strong high here. Actually, it would be this strong high. Broke out from this high here. This is the high that created the lowest point. That panel. And then we'll go here. There we go. Broke out above the strong high, and then it's been basing for a long time now, actually. Came to its 200-day moving average, its 40-week moving average, and now all the moving averages started converging. We've built a flat base of 1, 2, 3, 4, 5, 6 weeks, and we broke out on earnings. My guess is this is going to at least this $27, and then 30, and then I would be looking for somewhere up around here. I don't know how legit these were, but I mean, this 38 would be next. And this would be one where this is a long-term hold, in my opinion, something that you could get into and just use like a 40-week moving average as a stop loss. Like if you were, excuse me, if you were to get into this just this last few weeks with a 40-week moving average entry, the 40, I just changed that to 40. 40. This is what a lot of this is what they recommend in the IPO advanced book, in the IPO life cycle book. Just use a 40-week moving average as your 200-day moving average. If you just use this uh, as a trailing stop, you can get huge gains on shit like this. And so in my opinion, you could hold this long term, use this 40-week moving average, and just ride it out. And you're probably gonna get at least up to this $30 level. Next is Elf Beauty. Again, phenomenal earnings on Elf. I don't necessarily know where they are after hours. I think they're at all-time highs though. They beat by 97%. Again, this is one where this is a long-term leader. This has been going up. This year. It went from 24 in May 2022. It had no bear market with the fucking rest of the market. And then it had a small pullback to the 40 week, undercut it, and then from there it's even up 100% almost. And so this is just a huge leader. Its earnings have increased. Its sales are increasing. It's got a lot of room to run. It's it's expecting a 60% increase in guidance for next quarter, for next year. This is a yearly. So for this quarter, they're up 84% for quarter over quarter, or for year over year. They're up immensely quarter over quarter. Quarter over quarter, they're actually down. They're actually decelerating. I would keep an eye on that one. And then, but year over year, they're up 54%. It went pretty well. Their guidance for next year is really, really good. Their guidance for the next quarters are kind of mids, in my opinion. And you do notice a 1, 223, 182, 127, 54. You see 4 quarters of declining earnings. When we saw that with Zoom, that did kind of show a peak, a top in the stock. So just something to keep an eye on there. Notice how as it was running before, you see this heavy increase. Where is it? 2022. There we go. It started in 2022. 44, 71, 100, 223. And that's where it really started moving. 22 to 23. And then it had good earnings still, but it's starting to, now you're seeing 3 quarters of 1, 2, 3 of declining EPS, even though sales are going up. Kind of just makes me nervous. That's just kind of what I think fundamentally of it. And then Fortinet was the next one I wanted to look into. I hadn't looked at this one. Again, this is a fourth quarter of decelerating earnings. They are up quarter over quarter, are up 15% year over year, and up 10% quarter over quarter. But again, 4 quarters of decelerating revenue. This chart, weekly chart, just kind of looks trash to me. We're inside a fat fair value gap. There's not really any sort of an edge for long or short. This whole thing is just kind of trash to me. So not anything I'm interested in. Snap I wanted to go over. I definitely wanted to go over Snap because this had a phenomenal fucking setup. Notice here, we broke above this high, came down, and now we've been holding tight for 6 weeks, 8 weeks. 1, 2, 3, 4, 5, 6, 7, 8 weeks. Just looking super nice within 10%, I think. Yeah, within 12%. Holding tight for 8 weeks, 12%. Closing at the highs, volume declining. This is just looking really good. I'd say the biggest problem, in my opinion, is on the way up. You don't see heavy volume. That would kind of be the key. But you do have, they did not terrible with their earnings. Quarter over quarter, they're actually up really, really well. But year over year, they're down really bad. 0.14 to 0.48, so they're down 42%. Their guidance was the worst part, in my opinion. They guided down really, really bad. And their expectations for the next 4 quarters is terrible. And that's what went wrong with the stock. And we see here. I got longs. I was in the mall, honestly, when I got them. And so I just grabbed a couple contracts. Went in with a small position. Just a lot of it. Haven't done an earnings lotto in a while. And I got fucked, of course. It's the name of the game. And even said, I was like, you could grab both. And then I got like hurried up in the store and shit. And so I never did. And so I just grabbed one. Stupidly for me. If you grab both, you're up as fuck on the 13s. Because I mentioned it in chat. I was like, you grab the 13s for February 16th for puts and the 20s for calls. One of them's gonna pay. The fucking 13s were like 30 bucks. They're like 30 cents for options. It was like now it's down to 11.78. So this thing's down like 20 cent, like 20%. 30%. Yeah, those my contracts are gonna be worthless. Whatever. It's the name of the game. But yeah, this is not on good earnings. Gap down like that. This isn't something I'm willing to buy. I did get into, however, this lift position that started out really well with us too. So I think this is going to be a good one. Notice here we have the strong volume going up. That's a huge key. Break out of this structure shift, created a new high, came down into, I think it's a order block on the, yep, order block on the daily, plus the 200 EMA on the daily. And then it started based out for a long time. The one thing I was mentioning in stream this morning, and I still wouldn't surprise me if it would happen, is if we do happen to undercut all these lows and bounce back really heavy, that would be perfectly fine with me. I'm sorry, 1 second. I gotta go grab a charger uh from my computer. Okay, my bad. I had to grab my charger for my laptop. So one thing I did get into today was Lyft. I do like this little pocket pivot here, where a pocket pivot is the highest volume in over 10 days. And so we did get a pocket pivot here. We had a heavy volume on an up day. Closed pretty much really, really close to the highs on a 5% up day. So I'm looking for continuation minimum to this 1380 and then coming up to this $15, $16 level. And then above that on a weekly chart would be up to this 1836. And so I do like the volume here where it has heavy volume on this way up and then real declining volume on the way down. That's really key to me. So lift is one I am into. If we pull back and if we undercut these a little bit, but still close above all of this, then that'd be okay. Ideally, I really would like to continue up from here though. Another one that I'm looking in getting into, I'm not into yet, would be Carvana. It does again have all these equal lows, so I would be okay with an undercut of this for an entry. That would be ideal. So, but this was another one where I think it was a pocket pivot. I want to hide this part right here. How the fuck do I hide that? There it is. Yeah, it was the pocket pivot where it was the highest volume in over 10 days. Yeah, this is the highest volume in 15 days. Actually, it's the highest volume. It was higher than that. Highest volume in 28 trading days, 42 days. So this is a really good one. Maybe an earnings run up. I don't know how much I would. There's all these good setups, but earnings are coming up. So this is really a good one that I'm probably going to get back into if it can get back above this anchored view up from this high right here, break out and then retest it, or if it comes back down to 43, 44, then that would be another level to get into as well. Snowflake would be another one I'm looking to get into. I mentioned this on wins on Sunday as well with our. I've been mentioning this one for a while. Let me erase some of this stuff. But we have this breakout here. So we have, it was a 206, 203. And we traded a little bit on the way up, got got cut out at break even, and then it continued higher after pulling back and would have been at a pretty, at like it, if we would have held it through these 2 days right here, these 2 days, that would have been a 50% drawdown after an 80% gain. So that wasn't something I was willing to hold into. But now we broke out on heavy volume and have these two nice inside days at above this anchored view up and above this anchored view up here, holding from the day before the breakout and the breakout. So this one's definitely one that I'm looking at getting into. If it can hold here and have an upside reversal, come back up to this 220 and then a breakout above that would bring it to 245 most likely. And that one I would just put a stop either below here if I can get in low, or just get it below, probably below this anchored view up around here, one of these lows. So like at 6 point and then looking for 40 points, 35 points. So about a 4 to 1. That one's gonna be pretty good. And the last would be Upwork, which is hitting its 200 day. I really like that. I really like how it failed to displace below all these lows. This looks really fucking good. If it could get some volume in it, this looks really good. Someone showed me this today. I've been watching this for a while. Then I seen someone mention it in chat, and I was like, "Ooh, okay, this might be." If it could dig a little deeper into this fair value gap, that would be ideal. But you might see a bounce up to like 14, right around here. I'm actually gonna set an alert for this little trend line. Everybody's gonna be watching this. Actually, I'm gonna set the alert for yesterday's high. Right here, this little 2 day pivot. Alert there, and then an alert here in case it undercuts these lows. Hey, fuck off. So this one looks really good. If this could pivot here, this looks really good. Fuck. Can you guys hear me? Yes. Okay. I don't know why Discord didn't show me the notifications. Ever since Lyft. Okay. So Lyft, and then it was Carvana was next. And that one, I mentioned it's called a pocket pivot, where Carvana has the highest volume today that it's had in about 48 days or so. And if it can get above this $50 level, then it'll easily come to the 62. If we could get a pullback somewhere into this 45, 44 level, then that would be a really good entry as well for a stop on somewhere under here. If it does undercut these lows, that would be like the ideal entry. If we get like a wick under and then pop right back up, that would be super super fucking awesome. Now share screen. Fuck. So if we get these lows at 39 and pop right back up, that'd be freaking awesome. That'd be a fire entry. If not, somewhere right around this 45 for a retest of this pivot breakout right here. That would be a good entry as well. That'd be kind of what I'm looking for. Or like if it breaks out and then comes and retests this $50. But notice here, when it moves fast. So you got to get in and you got to get in fast. Notice here, this was its pocket pivot. It had a breakaway day, and then it just continued moving higher and higher. So that's definitely like if it could do something similar to that right here, that'd be super nice. And then I went into snow, where we have the anchored VWAP from the February 1st, so the month today, anchored VWAP. I've been watching this for a while. We got into it, got shaken out from not being able, we wouldn't have been able to hold this through this loss right here. That would have been a 50% loss or more in the trade. So it didn't hold through that. It gapped up from Facebook earnings. Now it's just gone sideways. So this may be a good entry for us. Maybe stops below this low or a low up here or this anchored view up, depending on how conservative you want to be. And then looking to come up to this strong high here, right around 240, 240, 245. This one's nice because we don't have earnings until the end of February. I'm really trying to stay away from shit that has earnings within the next couple weeks. Upwork is one that I really like as well, mainly because of this undercutting all of these lows just barely and then popping right back up today. And so if we can hold here and kind of pivot, then we can come back up to these 1570 level. Above here though, once if we really pivot above this 1570, then you can easily come to 17. That was the high from here, and that'll also be the 200 EMA on the weekly at the time. But then above that, there's not really much until 1850. That's these highs with a fair value gap above it. That's probably going to be the draw. Above 16, that'll probably be the draw. 1875. Then above that would be this 25. So Upwork has a lot of movement where it could move. And then Roku, and then Roku would be another one. This one doesn't have great earnings and it has earnings soon, so I am a little more skeptical of getting into it. And then you do have this, it would need to get above this anchored view up from the high in November, and then also this 50-day moving average. So turn off all the drawings. And then this 50-day, it would have to get displacement above there. Notice this was kind of a key for me. Where we got out was right here earlier this at this 50-day moving average. Got rejected here, and then we got out somewhere right around 92 or so. because it got rejected. So now it's shaping up again, and then we got out again down here. I tried again, got out down here, and now it's shaping up again. So if it can get above this pivot, above this moving average, and maybe have like a pre-earnings run up, earnings is early next week. This one may not even be able to get into. That's the problem with a lot of these earnings trades is they're harder to get into because then it would come up this 108 bare minimum. And most likely, yeah, that'll be right at the 200 EMA on the weekly chart, which is perfect. So those are all the charts that I have for the week for this upcoming week. Some seasonality that I have coming up in the for the rest of the year, and then the one or two things that I do caution on. Ooh, DJPY. This might be close to an entry. Alright, guys, I'm gonna head out. I'll catch you guys here later.